Hey traders, checking into the stock market today. So in this video, I decided that I'm going to talk about my bearish lean that I have in my gut on the broader market. And it's really only been prevalent in the last week or so. So I'm going to talk about how I approached that. And I laid down for a nap after deciding that that's what I was going to talk about this video. And I was awoken by, I kid you not, a black bear. So let's look at the charts and talk about the bear. So first the bear, I was laying down on the couch, closed my eyes, was awakened. On the front porch, I've got wind chimes, and there was a huge clash of wind chimes. And so the first thing I do is I look out the back window at the trees, and I say, did we just have a huge gust of wind? And none of the trees are moving. So I'm sitting there thinking, okay, what could that sound have been? And then maybe 30 seconds later, I see a black flash in a reflection of the window and look out the back, and there's a big old black bear around this little waterfall that I have here. So I don't exactly know what went on because my front camera did not capture the bear, and it's not possible that he could have smacked the wind chime without being on camera, and then he would have had to have sprinted around the house. I don't know what happened, but there was a big black bear. So the S&P 500. So I have a bear gut feeling, and it's not substantiated by much that I'm seeing on the charts. Aside from, yeah, we're being overextended, yeah, all that, but nothing's different between now and a month ago with regards to all of that. So how do I approach that? I recognize first the most important factor is zooming out and recognizing that. Because the worst thing I could do is not recognize that I have a gut bearish bias and then just trade based off of it blindly. And that would be a disconnect between, my brain and my body to a certain degree. And that would be a bad thing, because that would just have me constantly trying to short in a bull blue sky market. So I have to recognize, number one, okay, I am feeling this. So then I try and assess, why am I feeling this? Okay, yeah, SPY holding the weekly EMA 12 for 8 months at this point. No monthly consolidation in a significant period of time. The VIX has a weekly falling wedge. We're seeing cases increase. There's the potential that we could backtrack a little bit and we could see something in terms of lockdown. So all these things are stacking up. And that's essentially why, in my opinion, I'm feeling this way. And also the fact that we see, the V-shaped recovery and a new all-time high, but just the bulls look tired. We're lacking follow-through. And if this were the 5-minute time frame, I'd be looking for a rising wedge right now on SPY, just because the bull breaks are lacking any follow-through and consolidation is due on the longer-term time frame. And in that instance, it's the SPY monthly where consolidation is due. So I recognize that I'm feeling this. I recognize that it is potentially influencing my decisions as a trader. And then I have to determine what is the course of action from here. I can, number one, not trade and just wait for it to pass and wait for more clarity on these charts. Number two, I could listen to my gut and establish some positions, bearish, with stop levels, of course. Or I could, number three, try and completely disregard it and trade in the other direction. So my approach is going to be to have bear exposure, which I have had for a while now as my hedges. And I entered a bearish AMD swing today, and I'll talk about that at the end of the video. But overall, I'm not going to change much. I'm going to be, again, just treading water very lightly, not doing a whole lot. And if I do make a mistake, it's going to be leaving money on the table. So the mistake that I'm going to make in these price levels, if I can't be comfortable going bullish, and again, I'm not talking about individual names, I'm just talking about the broader market, and I ideally want the broader market at my back as far as the trades that I'm in. But if I can't be comfortable going bullish, it doesn't mean I have to go aggressively bearish. It means that I can be patient and just wait. So I am going to have some bearish positions. If we break bear, I will benefit and my account will go up. And if I'm wrong, I'll leave money on the table and I'll miss a leg to the upside. And that's fine by me. So I'm not going to be wrong and take a big loss. I'm not going to say, oh, my gut's feeling this way, I'm going to start establishing big positions. That is the way that I'm going to approach it. I am going to act on my gut to a certain degree and have a bit of a bear lean in the short term as far as the trades that I'm looking at. But I will have stop losses on them. And again, it's essentially just going to be me missing a bull move up if we do see another clear leg up from where we stand. So SPY, again, we're just watching the S&P 500 futures and the 12-hour, which remains in an equilibrium. No new information today, aside from the fact that we set a lower high compared to our resistance levels. So we double bottomed at support yesterday with a very powerful bounce, and now we've rejected from resistance. And again, in the video yesterday, talking about how the 4 hour, I would have been surprised if we broke resistance with the 4 hour that extended. So if I want to zoom in, it's a 4 hour equilibrium shaping up, watching for a higher low compared to the low of yesterday, or I can just stick to the 12 hour. And the 12 hour continues to trade sideways now for maybe the 4th day in a row at this point. A little bit longer than that. 8th day already? 8th day in a row. So sideways. The NASDAQ broke bull from some levels, but did not get the all-time high. We did double top at the all-time high, but the NASDAQ is stronger than the S&P 500. So we can see we bounced off that low of yesterday. We held all support yesterday where the S&P 500 did not. And then here we are testing this all-time high. So that being said, the NASDAQ alone isn't going to be enough for me to go bullish, because there is a scenario where if this is a 12-hour rising wedge, which I am keeping an eye out for that to be a possibility. So if this is a 12-hour rising wedge, it's possible that this pattern breaks, or I should say that the NASDAQ futures hit all-time highs, lacks follow-through, and then drops for the S&P 500 sideways range to lead to a bear break. So if the NASDAQ breaks resistance and the S&P 500 is not breaking resistance, that's going to keep this potential rising wedge on the table for me. So there are enough signals that I have a lean bearish, not aggressively acting on it. I am acting on it, and I'm very curious to see how the next 2 weeks play out. And I'm also keeping in mind, in the back of my mind, that bigger picture macro moves that I've been watching for, I've been about a week or two early multiple times in the last few months. I was 2 weeks too early for the financial sector pullback. I was maybe a week too early for, no, 2 weeks too early for the growth top of the bounce into weekly consolidation. So just a little bit too early on the bigger picture macro stuff. And so I'm keeping that in mind as well. IWM. So IWM had the daily trend change with no follow through, which means zoom out and scout a weekly lower high. This is a potential weekly lower high being set. And then we're going to be looking at 209.05 support. If that level breaks, it'll be the first confirmed weekly downtrend in a very long time, because that will be a lower high and lower low. We've broken some weekly supports, but we have not confirmed a lower high and lower low at this point. So it would be notable if that were to happen. So 209.05 is a very key support level from here, and that's about 4% away. The financial sector holding on well for the bulls. We set an hourly higher low this morning. We double topped at the high of yesterday and then tightened up a bit. But overall, it's going to require the same thing as IWM here, a weekly lower high and a bear break following through with downtrend. So we would have to break 34.90. That's a ways away. Step number one is breaking 36, which has held a few support tests in the last 2 weeks. And if 36 breaks, that's definitely going to increase my confidence in the bear feeling that I'm feeling. Healthcare, bearish reversal candle on the daily, new all-time high hit today, higher low every single day for the last 6 days. When that pattern breaks, this is certainly one sector that has a lot of space to work with, where anything above 130.10 will be a daily higher low. So easily still in an uptrend at this point. Biotech sector, bulls look great this morning. We're watching for the biotech sector to potentially be a laggard for the big board, the larger market cap biotech names that have been running hard, but we rejected from daily resistance 128.57, and I'm looking at this as a low, high, higher low set at 122.40, but if we cannot break 128.57, we're not confirming a daily trend change. So it's attempting to be an inverse head and shoulders, but the bulls have to prove it. SMH, all-time high, bulls in complete control. AMD continues strong. So I'll talk about AMD here at the end of the video. But SMH, new short-term support, 262.85. Bull break to the higher high. Bulls in full control. Another name where bulls are comfortable with space to work with to maintain supports. Probably the strongest sector along with healthcare that we look at. TAN, a little bit of follow through from the daily trend change. So again, we're watching, can the bulls confirm a weekly trend change? 93.49 key resistance. Tons of space for a daily high or low next time we consolidate. So one of the growth names here that is looking pretty good. And if we look at our other growth names, ARKK, trying for that weekly high or low, not as convincing. And PLTR, same thing, not convincing. NIO, a little bit more convincing, but similar. A lot of follow-through still needed on these growth names. And obviously, if we do end up with broader market weakness and a pullback, these growth names aren't going to be positioned well, and they'll be setting their monthly lower highs a lot sooner than bulls would like to see. MSOS, still weak. Bulls proving nothing as long as daily EMA 12 is resistance. Just a slow grind downtrend at this point. Earnings are approaching over the next couple of weeks for the sector. Certainly needs a bull catalyst. The VIX rejected with a double top of resistance yesterday, and now we're looking down at 1719 support. High, low, double top, higher, low. So if the bulls hold 1719, we remain range bound in a daily equilibrium here. Today was a big fake out day for the metal bulls, unfortunately, because the dollar started the morning real weak and then just an absolute V-shaped move, and it completely changed the dynamic of the morning. So in the end, it's a defend of support, 91.78. And now this is the daily bounce getting followed through. I'm still considering anything under 93.02 a daily lower high. But it was a save by the bulls. And with that, it gave gold. Just look at this turnaround. Oh, what a strong morning. And then you give it all back. All that work. So the daily higher low was set on gold at 1805, but now we've got a triple top in the 1830s and unable to get a bull break. Silver confirmed the daily trend change for the first time in a long time. Zero follow through. So a very disheartening day for the metals bulls that took a day or two. It really took 3 days to establish this base, to establish the higher low. Okay, making our bull move. Give it all back. All that work out the window. Miners, gap up open, confirming the daily bull flag. I didn't even touch these lines, and we're right back within the megaphone, rejecting from resistance. So all in all, a lot of metal fake outs with the dollar bounce. And if we see a bear break of 34.64, it'll be a loss of that key short-term support level. Oil is still weak. Big bear day today. Bearish reaction to the inventory report. 65.01 key support, 5% away still. 4-hour RSI is oversold. Hourly, I've got a downtrending support line to keep an eye on that's coming into play. So if we were to drop straight to 65 from here, that 4-hour RSI would be crushed, and there would be a potential play off of that level. But next time we bounce, due to the size of this pullback, we will be scouting a daily lower high to be the result of that bounce. Natural gas bull break, 12-hour equilibrium broke bull, and we've got follow through and volume. Bulls want to see a bit more follow through, because if that were to be the top, then we would be scouting a rising wedge, because it would be a bull break lacking much follow through. But 421.6 and a lack of resistance after 421.6. And as far as the daily is concerned, anything above 3868 is a daily higher low. And the daily EMA 12 is a great guide, visually keeping the bulls strong. So overall, got a bearish lean. I'm going to position for it because my gut does service me, wrong word, but serve me more often than not. So I'm not going to ignore it, but again, I'm not going aggressive. I'll never go aggressive on a gut. I need a gut and technical signals that are clearly aligning. And there's not enough technical signals, especially when you're trying to take on the big bad bulls of the broader market, where they've got everything in their favor in this skewed, unfair game. Playing against the house here, but that's the way it goes. So trade I took on AMD, just watching for it to be a daily volume climax, certainly a very high volume candle. Obviously, we're very overextended on this move. And I just saw a setup that I like where the 15-minute broke bull here and saw no follow through. So I saw that bull break take place and then straight into the 5-minute consolidation beginning. So I entered a short in the upper 119s and put my stop over 121.01. And then I exited half into the end of the day. And so now my break even is probably upper 120s. Yeah, right around 121. So worst case scenario, we gap up open and I'll have a day loser. But I had enough wiggle room as far as where my break even is that I'm giving the bears a chance here, where if we see a break of 117.27, it'll be a shift in momentum on the hourly. And we'll be watching for daily consolidation to shape up if that takes place. But if we see a new all-time high, I'll exit that very quickly because, again, I'm not just going to constantly fight a blue sky bull in a blue sky market. So worst case scenario, I'll take some small losses on some bear trades and I'll miss a move to the upside. And best case scenario, we drop down and I make money bearish. But just have to recognize that. Again, the most important moral of the story is the self-recognition that I am feeling this way. Because it's not common for me to have underlying subconscious bias. And that's something that we obviously want to eliminate as traders. We don't want to have that subconscious bias, or it will cause us to, most of the time, lose money. So we'll see how it plays out. Certainly going to keep updating on a daily basis. I appreciate you watching. Do good things. Careful for bears out there. And we'll see you tomorrow.